Okay, everybody. Want to put together some information here for you on our short-term trend trading strategy, and we use multi-time frame analysis with key levels in the market and a dual stochastic oscillator system for entries. Um, we mainly trade Nadex, but this can be done on Forex, stocks, stock options, whatever you're trading. Um, if there's price action, you can use this. Okay, so let's get into the material here. I just want to point out I am going to start with some very basic material in case there is any new traders trading with us. I want to get them up to speed real quick on some basic information on trends, and then it will get more advanced as we get into the system further into the slides. So please, if you are experienced, stick with us. There is some good information contained here. Okay, so definition of a trend and the anatomy of a trend. Obviously, there's two types of trends or two directions the market could go other than sideways. It can go up and it can go down. Um, and an uptrend is defined as when price is making higher highs and higher lows. And a downtrend is defined as when price is making lower highs and lower lows. And trend anatomy, there's three different classifications of trends. There's primary trends, there's intermediate trends, and there is minor trends. I'm going to get into some chart examples here in just a second so you can see what I'm talking about. This is a picture of an uptrend. So basically it's a support and resistance shown here by the blue lines. Okay, and it's a channel, and it's an upward channel. That's what an uptrend is, and it consists of making the higher lows, excuse me, the higher lows and the higher highs here. Okay, higher lows, higher lows, higher highs, higher highs. This trend actually did have a slight sideways jog in it, but it did resume pretty quickly here, and it kept making its higher lows and higher highs, and that is your uptrend. On the other side of the coin, you got the downtrend. Again, it is a support and resistance channel moving in a downward fashion and is making lower lows and lower highs. As you can see, lower low, lower high, lower low, and lower highs. So you got a downward trending market here. Okay, so just to break down the classifications or the anatomy of the trend. You have a primary trend, okay, and that is the green arrow here, and you can see the whole upward movement of the price action. It's moving in an upward direction, and that is your big, strong current there. You want to be playing with that, trending with that, okay? Now you see this red arrow, and you can see price is moving down in an opposite direction than the primary trend. This is your intermediate trend right here, okay? And then in this black box I highlighted here, you can see some little down, up, down, up, down, up movements, and these are your minor trends. As I wrote here, the strongest, most valid trend is the primary trend. For higher probability trades, you should be trading with the primary trend. Okay, multi-time frame analysis used for short-term trend trades and which charts you need to be selecting. For the shorter term trades that we do on Nadex, and they're a few hours, these trades, upwards of maybe 10, 11 hours really at the most is what we do. We're going to be using the 1 hour chart for our big picture analysis, our line drawing, and our trend determination. So we're trying to find that primary trend, that big flow, that big flow. Excuse me, got to get some water here. Okay, so we're looking for that primary trend. Okay, I'm quickly going to go through a chart and show you what your first step should be while doing this analysis. Okay, so I want you to get onto a 1 hour chart, not the 15-minute. I want you on the 1 hour chart, okay? And say we were trading in this area over here. Okay, I'm going to put a line, say that would be the present time. Okay? You can see here that the trend is down at that time. Okay? So in that case, with this backed out view like this, you can see that you need to be looking for sells. You want to be selling with the big flow that's going on at the current time right here. Okay? So your first step would be complete. You take the 1 hour chart, you back the thing out as far as you can, and you can see clearly you need to be looking for sells. Okay? Now the line drawing part I'm going to get more into just a little more into later on into the end of the presentation here. I do want to stick kind of to the slides here, and but the line drawing is very important as well. And we're going to get into here talking about top edges and bottom edges in the market. But first, let's talk about the 15-minute chart. And the 15-minute chart is really where you're going to be doing your trade entries. So you're going to be placing the trades while you're on the 15-minute chart. You're going to get all your framework and the analysis done on the 1 hour. 15-minute chart, we'll do some trade entry. Now, the entry is obviously based off the analysis you did previously on the 1 hour chart. So if your findings are a downtrend on the 1 hour chart, you will be looking to make bearish plays or to be selling top edges of the market. If an uptrend is found on the 1 hour chart, you will be looking for bullish plays or be buying on the bottom edges of the market. Now the larger time frames, when it comes to indicators, when it comes to looking at price action, whatever, the larger time frames are going to hold more validity than the smaller time frames due to there's more data contained in each one of those bars or candlesticks. So the signals you're getting off of the bigger time frames is a lot more valid than the smaller time frames. So never substitute taking a signal off the 15-minute chart when it's contradictory to the 1 hour chart. If there's a contradiction, you want to go with the 1 hour chart. That's the more sound chart. Okay? And on that point I just mentioned, I'm going to get more into that in just a minute. Okay, so playing the edges. Okay, there's top edges of markets, there's bottom edges of markets. You have to go in and determine them, and we're going to do that later on. But in a downtrending market, you want to be selling on the top edges of the market. Okay, so and then on bottom edges, that would be in an uptrending market. You want to be buying on the bottom edges of the market. And here's a good visual of what top edges look like. So here in this example, our trend is down, so we're looking to sell the top edges of the market. So what do you mean top edges? Okay, so you can see now price has come down, right? And it bounced at this point, so you're going to draw a line right there at that point. So we bring that line across, right? So now, and sorry, let me back up 1 minute. Price had come, I cut this off a little bit. Price had come right down to this level, creating a line here. Okay, so we put a line right there. That is a new support that has formed. Okay, so right now that is a bottom edge of the market, and you can see the market came up, went right through that, and now it's hitting it from the underside. So now, which was a support, is now a resistance, which was a bottom edge, is now a top edge. So we are in a downtrend. We are looking for a top edge of the market to sell. So once that price comes up, you get a reaction off of that, and it starts moving down. You're going to sell up here, something up here. If you're a binary options trader, you can trade an in the money there. You can trade an at the money there, and depending on time of day, you can trade an out of the money if you wanted to. But you know, a safe play would be an in the money or an at the money on this play right here. Okay, so let's go a little bit further. So price moves on down here. Okay, It comes up here. First, it comes right up here, so you can draw a line right here. When it tips off, the top of that candle hit there and bounced off, you have a top edge forming, so you make a line there. Okay. Price comes right back up to it again. You can sell right here if you want to. Okay. Price comes down, makes another bottom edge here, moves back right up to that level. Look at that. Right up to that top edge. Right here is a great time to be selling in the market. Okay, so let's see. So if you sold there, it moved down in your favor. Okay, so the market comes on down, makes another bottom edge, goes right up, goes a little bit past this top edge, but a quick reaction. You could sell there if you're seeing that it's getting a reaction in this area, because this zone right here was, a bounce point here, and over here it's kind of reacting in the same area, so you could sell. I probably wouldn't sell in that. So it's kind of a small little move. I like something a little more high probability, like this one is a really good one. But then, as you can see, price comes down. Again, we had a bottom edge form over here with these two candles. So there's your line. Now look what price is doing here. Price is just banging underneath there. Okay, so it's hitting top edge, top edge, top edge. You had all these bars here as an opportunity to sell into that market. Okay, so you're getting with the flow. So just top edge, top edge, top edge, and you can see the market just falls away. Comes down, creates a bottom edge, goes up just shy of that. So you had an additional entry point right here. Okay, that you could have sold right before that big move down. And then it gets down, makes another move up, bottom edge, and then comes right up, bounces off here, makes a top edge, comes back up, hits it again. There's your cue to sell. Okay, so it comes on down, and I think you're getting the point here, but a bottom edge comes right back up to where that one made a bottom edge is now a top edge. It's testing it from underneath, and the market falls away again, and so on and so forth. Now, this is just one layer of the analysis. I don't want you to go out there and start drawing lines on charts and not looking at anything else. Oh, I got the top edge, I got a bottom edge. This goes in conjunction with a couple other factors we're going to get into. So we can get into factors with the stochastic indicator and some moving averages and things like that. But this is the basic idea. And also, when we get into the charts later, I'm going to show you how these lines are derived here. I mean, I showed you a bit of it, but when we look left, you can see that price has reacted to these levels previous times before. So I'll get into that in just a bit. Now, on the other side of things, you got the uptrend and you got the bottom edges we're looking for, right? So in an upward trending market, we're looking to buy the bottom edges, and this is just the opposite now, okay? Price comes up. It creates a top edge. You got this whole top edge, and it creates a bottom edge right there with that black candle, right? So it creates the bottom edge, and it's just hanging out, bouncing in between here. It comes right down to the bottom edge right here again. So anywhere here, I mean, there. Oh, go back a second, sorry. Right here is really the key point that you want to buy. And you can see it goes up. It creates a top edge. Creates a bottom edge right there. You get this big candle coming off of that edge it just created. So you have a bottom edge there. On this candle, you want to be buying somewhere in here, wherever. You see a reaction off of an edge like that, that's a good sign that price is going to move on up. Okay? So it comes up, creates you a top edge right here, comes down, creates a bottom edge right here, goes up a little bit, slams right back into it. You get a big reaction. Okay? So you could have bought right down in here. It did come back and try to retest, but it went up pretty good right after that. So you could have bought here. You could have bought right there. Any one of those right there. Okay? Price comes on up. Now you have a strong top edge going here. Look, all these candles, all these candles. This thing goes up, makes a top edge, but look at this. Right to that edge. Okay? Right to that bottom edge. Look at this candle. Bam. All the way up there. And so on and so forth. You got a top edge, comes down, bottom edge, buy. Hits there, goes through, same thing. So this is a good example here though, and if someone sees this and they're trading this uptrend, and it's making higher highs, higher lows consistently here. Now this one's a little different up here because It's making higher highs, but I mean, this low looks like it's below all this stuff. So someone may say, "Well, look, the trend's over. It's reversing." If it does not bounce on this level, just look one level down. Okay, and it's even higher probability trade here. All it did was come back to test this level. So if it doesn't get you where you're looking for a buy on this level here, okay, it's just look one level down, and it does jump up again. Now this one you may have got nicked out on. You might have got stopped out on this one because you would have got in over here. You would have had your stop under here. You could have made a small profit here, but it did come back and probably stopped you out before it resumed its trend. Okay. Now, if you're having a hard time seeing the actual trend, there's some things that can help you, and those are the moving averages. We use a 50-period exponential moving average and a 20-period exponential moving average. So this basically helps traders see the current trend easier. And I put a big red knot used as a moving average crossover entry strategy. We do not use crossover moving average crossover strategies. To me, they just get you into a trend way too late, and not always valid. You could get into a little bit of a sideways movement in the market, and you think everything's crossing, and you just really get messed up. So we don't trade in that way. We do use the exponential moving averages as there's simple moving averages and there is exponential. The exponential is better for the short-term trading because it puts more weight on the most recent prices versus a simple moving average where it's evenly distributed over it's averaged over all the closing prices evenly, and it gives a much smoother type of look to it. So with the shorter term markets, you want to have something that's reacting to the market a little bit quicker. So use the exponential. Okay, so here's a quick look at what the moving averages will look like in an uptrend. You have the 50 and the 20 period moving averages, and I got the 20 here, which is your thin line, and the 50 here, which is your thicker line. The bigger, stronger flow. Okay, again, the 50 has more data in it, just like the 1 hour has more data in it and is more valid. The 50 is really the big river here, the big flow. So it is up. Okay, now I want to show you why the moving averages are helpful. Okay, because say you're over here, you're trading, and you're trading bullishly, and you see it get to here, and you see this downward movement. What is this? Your intermediate trend, right? Got the primary. This is your intermediate move in here with all your little minor stuff in between it. But this move would make you think that, this up movement is over. The trend is coming down now. But look at the moving averages. They tell a different story. They are still continuing up, right? It's moving up. So it's telling you trend is not over yet. There's a nice separation between them. They're running parallel to one another. This is coming right into the averages to move on up again. So you can play bounces off of the 20 period. You can play bounces off of the 50. Okay? So keep that in mind. Now also, I just want to touch on this. The intermediate moves we talked about, like this, these are called flags as well. Flag patterns. And when you have an uptrending market, your flag patterns are going to be bearish. That's another good signal that you're in an uptrend. You have bearish flags. Bearish flag, bearish flag, bearish flag, bearish flag. Okay? So that's another good signal there. If your flags are bearish, you're probably in an uptrend. Just another confirmation. And on the other side of it, you got the downtrend. So you got the 50 on top now, and you got the 20 on the bottom. You can see they're both nicely down. They're separated, and trend is down. Okay? So again, like if you were trading this, it's coming down. You see this, now it's starting to move back up. You say, well, maybe the trend is over, but averages are still straight on down there. So, and the price just continues to fall. Okay, so confirmation and precise entry tools. And I put this for confirmation because I don't want you to just look at indicators all day and forget about looking at the price action, as we've been talking about here in the first part of this video. So don't start using indicators as a crutch. Use them as a tool, a confirmation for what your analysis has told you in the initial stages. So we use a multi-time frame stochastic oscillator system. So we use two oscillators, two stochastic oscillators that is, on the chart. We use a 1 hour and we use a 15-minute. Just like the 1 hour chart and the 15-minute chart we use, we do the same with the stochastics. And we have a big river, which is the 1 hour, and a little river, which is the 15-minute. Okay, just quickly, I'm going to touch on what the stochastic oscillator represents, and it represents overbought and oversold conditions in the market. So, in an uptrend, you want to look for oversold indications, or for the line to be in the green area. So, down here, you got the green area, and you got the oversold. So you're looking for oversold conditions, like these spots here, okay? And that is when it's in an uptrending market. So if you're in a downtrending market, you want to look for overbought indications, or for the line to be in the red area, like it is here, 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 like those areas there. That is the overbought area. Now, the deeper the line is into one of these areas, the higher probability of your desired outcome. So that means you really don't want to be taking the ones that are in the white area. You can, but if you are looking for high probability entries, you want to try to stick to the extremes, okay? And these lines can be set. The dotted lines here can be set. Some people use 70 and 30. I like to use 80 and 20 to give a little more solid signal and a more extreme, signal. Okay, so now we have the trend is down, so we're looking for the stochastic oscillator to give an overbought indication, right? So the overbought would be at the top of the stochastic indicator, and you can see the trend is down. You see the 50 and the 20 period moving average coming down, right? Your primary move is down, and look at your intermediate is there, there, and your intermediate is what? They are flags in the market, right? So your flag is bullish, your primary trend is bearish, okay? So this stochastic has given us some beautiful signals here. As you can see, it come on down. Price went back up right here. The stochastic is in a very extreme overbought scenario. This is where you're looking for your trades. When this thing rolls over like this, okay, you're looking to sell the market. So all the areas I highlighted are sell areas, okay? Here it is again. This is up in the red area, curling over. Here goes the price action straight on down again. Here's another one. Up there, you could sell up here, price falls down. And once again, over here, you have it moving down out of an overbought area, and price does the same thing there. Okay, so now on the other side of it, we got the trend going up. So we're looking for the stochastic oscillator to give an oversold indication here. Okay, moving averages, everything, big trend going up. Okay, your intermediate or your flags are now bearish. Okay, you got bearish flags. That means you're in an uptrend, and you can see I indicated the key points, and this is where the oscillator is showing an oversold indication. Right, oversold. You could have bought there. Oversold. Could have bought there. Oversold. And everything goes in the direction of the big flow. Okay, so the multi-time frame stochastic analysis when currents align. Okay, 1 hour stochastic and 15-minute stochastic used together to create a valid signal and allow you to get into the trend in its early stages. And I have this in big letters here. It's the big river and the little river. Gonna explain this. Okay, so we have the 1 hour stochastic right here, indicated by this line. That is my big river. That's the big flow. That's the one that contains all the data, the more valid signal, right? The bigger time frame. So it is moving in an upward direction. And now we have the 15-minute stochastic, okay? So that's the little river. Now these things move independently of each other, but when they start moving in the same direction at the same time, those are key points for you to catch a nice thrust in the market. Okay, so as you can see, it starts out, the big flow is up, but the little flow is down. So that's not where you want to enter, but it does start to curl up. Now here, it's going up, and this is going up. So the 1 hour is going up, and the 15-minute is going up, and you can see this is where the market would thrust in your direction. Okay, it comes on down, does another one here. Here's another entry point. It does another thrust. Goes with the market. Now this coming down doesn't necessarily mean the trend is over. It's just not the best place to be entering. Now you could use this as an entry and an exit signal. Okay, you would get in when it starts going with it, and when it starts turning out of it, going against what's going on, this starts moving down, and this is moving up. So you have a contradiction there. This could be your exit. But for this example, I'm just showing you the entries and what you're looking for and how to get with the flow. Also, keep in mind that the rendering I have here is a very clean look. It doesn't always look as clean as this on the indicators, but I want you to get the basic concept of what I'm talking about. So you're going to buy on the low points here, okay? Now, on the other side, when you get the downtrend, you see the big flow, the big river is moving down here, okay? Moving downhill. So like before, we were buying on the bottom here, but now that it's a downtrend, we want to sell at the top, right? Buy low, sell high. So once it starts curling over and starts going with that big flow, you're going to get a thrust in your favor, or the direction you're looking. Same thing here. Comes up, thrust down. So let the big river be your guide, and let the little river join it to create a nice thrust in the market. Okay, so the trend is up, so we're looking for buy signals. As you can see, the trend is up. The moving averages are moving in an upward direction here. You're going to have the 1 hour, the big river flowing up, and the 15-minute little river flowing up. This created a buy signal. So let's look at the example here. This line here indicates the entry point. Okay, and what you have is the uptrend with oversold conditions right here. It's way down in the bottom of the oscillator, and now we're getting a curl up and a curl up. Okay, so once this red line starts moving up the way it is here, we check the 15-minute and see if it's doing the same thing. It is. So this is a clear entry point, and you can see the power of this and the momentum this had moving up. Look at this move right up here. Okay, and it continued for a long time, but a nice move there. Good momentum, right? So that's powerful when you can start getting all of these currents to align. I wrote down here when the 1 hour, the 15-minute, and the moving averages all align. It's an extremely powerful, extremely powerful signal. As you can see here, everything is in flow then. Okay, so that's a beautiful entry point right there. And just the opposite for the downtrend. So the trend is down. We're looking for sell signals, or we're looking for an overbought situation within the stochastic. Okay, so the 1 hour big river flows down. The 15-minute the little river will be flowing down too. This created a sell signal. So we have two different entries here. Okay. So primary trend is down. We got the overbought condition here. The 1 hour is moving down nicely here. The 15-minute curls over, joins it very nicely. And if you sold right here, you got this whole move down right here. Okay? Same thing over here. You got the 1 hour curling down. Now this one wasn't quite as high, so you could take this, right? You'd like to see it a little bit higher, but you could still take it. And the 15-minute did join it. So another strong move down. Okay. Okay, now this is a big key point here where you can really get yourself screwed up with this system if you get a little jumpy and try to jump the gun and get into these trades early. So it's very important to wait for the 1 hour to turn down first and for the 15-minute to join it. You do not want to get your signal off the 15-minute turning down, then the 1 hour joining it, for the following reasons. The 1 hour is the bigger time frame and therefore more valid, as we spoke about. But the stochastic is a range-bound oscillator, and what that means is you can get the oscillator to go up into an overbought or oversold condition up in here or down in here, but it can get stuck there, okay, because it has nowhere else to go. It's range bound. It's stuck between a range. Okay, it's not like a MACD where it can just keep going up and up and up. This is stuck between a range, so it can happen where it'll come down here and you'll think, okay, well, it's a good spot to enter, and the thing just lays down here and gets stuck there. So you got to be watching for that. Okay, so you do not want to be entering when the stochastic is flat on the bottom, or like in this case right here, just say, well, it's going up. Well, I'm going to enter right here. I'm going to enter right here, and when the thing hasn't even finished going all the way up yet, you don't know how far it's going to go up. You don't know if it's going to stay flat in here. You have to wait for that thing to turn down to be the signal. Okay, so don't try to jump the gun, and often the market will give you more than one chance to get in. So if you do miss a trade, no big deal. You can go on to the next trade and see what else there is. But I depicted here the wrong and the right time to enter. Here's what happened here. This 15-minute, excuse me, this 15-minute gave a sell signal right here because it was way up in the overbought, very nice, started turning over. But the only problem here is, look at the 1 hour at that time. It's going up. It's not going down. So, yes, you could have entered here, and yes, the market did fall down, but look what happens. You enter here, you put your stop right up in here, and look at this. Bam, you're stopped out. Okay? Or you could have just waited a little bit longer. Now look at the 1 hour. The 1 hour is coming out of a overbought situation, moving down. The 15-minute rolls over, joins it. Now look, you're getting an entry over here somewhere on the other side of this spike, right? And look at this. If your stop is up here anywhere, it's all up here, your stop, right? Your stop is above all this stuff. Price falls away. Okay? So that's the difference between a winning and a losing trade right there. So just be patient. Wait for it to set up the right way. Wait for that 1 hour to show that it's moving down. You never want to get in on a sell when this thing is going up or flat up here. Okay? The also important stochastic settings. And I went through tons of trial and error just to get it to the point where, as I mentioned just a second ago, where the 1 hour would give the signal first. Okay? So I messed around with a bunch of signals. So on the 1 hour stochastic, you want the settings of 5, 3, and 1. And on the 15-minute, now I use MT4, and with the 15-minute stochastic, it's the actual default stochastic that is in the program, and that means that it will change to whatever time frame you are on. So if I go to a 30-minute, it will show me a 30-minute stochastic. If I go to 15, it'll show me 15. If I go to an hour, it'll show me an hour. You want that one to be that way. You want the 1 hour to be standard. So not standard. You want the 1 hour to be basically static. So it's going to be on if you're on a 5-minute chart, it'll still show the 1 hour. Okay. Let me show you a quick example here. Like right now, I'm on the 1 hour, okay? Let me open this up a bit. I'm on the 1 hour, okay? But if I go down to a 5-minute, you can see this stays at the 1 hour. You see how smooth it is like this? And this takes me, showing me the 5-minute stochastic. So you can pull entries off of this too. Like here, the 1 hour big river is moving up, right? Look at right here. You're getting a buy signal here. and look at the market, it goes flying up. So you can use it on different time frames like that if you want to. I don't really trade a 5-minute chart. I trade the 15 and the 1 hour. Okay, so back to the slides here. Go back. So on the 15-minute default stochastic, you want to use a 14, 3, and 3 setting. So 5, 3, 1, 14, 3, and 3. Okay, so putting it all together, summary of this 3-step short-term trend trading system. You want to look at the big picture, identify the trend, then you want to locate key top and bottom edges, and then you want to confirm your findings with dual stochastic analysis in addition to locating new trends that are starting to appear. Okay, so let's look at some chart examples. And I wanted to get into drawing some lines as well. Okay, this was our example from earlier. Okay, now I'm going to take this stuff off here a second. And I wanted to talk about some of the line drawing right now. I showed you how to identify the trend there earlier in the video. Now I talked to you about those levels. Okay, now how to draw those levels. Okay, now in a situation where you have like this and like this, where it creates these valleys, okay, you can really draw some nice lines if you look just a little bit to the left. Okay, so let's do this. Start over here. Okay, the market made a top over here, so we'll draw a line across. Okay, and the market made a little bottom right there. Okay, and the market came down here, made a bottom. Okay. Okay, so it made a bottom there, and then it made a top right here. Now you can see already that it made this top, came down, went right back up there, right? And it's a downtrend. So you want to sell tops. If you sold that top, you made a nice trade. Okay? But I'm going to draw these real quick and show you how they're pertaining here. I'm going to draw them here and show you how they're pertaining over there. Okay? So yeah, you got another bottom edge that the market formed over here. Somewhere right in there. Okay, so this goes back up to that top edge. You create another bottom edge right here. Comes down. Here's your next bottom edge right there. Okay. And then here's another bottom edge right here. And here is a top edge right in here. Okay. And we'll do another bottom edge right here. And let's see what else we got. And another bottom edge right in here. Okay, so now we drew those lines across like that. Okay, you can see now we got a downtrend. We actually even have a reversal in here, and we have a new trend over here. So we have two trends to look at here, and I'm showing you how if you find you know, the market moving down like that, draw your lines, bring them across, okay? And you're going to see now, so all these top and bottom edges this thing formed over here, look now how this uptrend over here, if you were trading, say, from right here, if you were trading from right here, you can see that the market does start moving back up here. And one of the signs that this reversal, and I don't want to get too much into reversals here because I'm going to make a video on it, but it's making very, very nice lower lows and lower highs as we talked about in the downtrend. Here's your first signal that things may be turning, because now it made this higher high. It's not a lower high no more. There's your first signal. Okay? Now you can still sell you can still sell that top edge and make a very nice trade here. But now if it does start making more and more higher highs and higher lows, you got to be looking at it at, this is maybe a trend here that is starting to go the other direction. So anyway, we do get the new trend going on here. Now watch what price does. A bottom edge was created here, right? So it comes down to that bottom edge. Now you could have bought that bottom edge, right? Where does price go? It goes to that edge it created right there. Bounces off of it, comes right back down. Now we're thinking the trend is going up now, so we're going to do bottom edges now. We're buying bottom edges. Before we were selling top edges, now we're buying bottom edges, okay? So price goes right up to here. We're not going to do anything. We're going to wait for that price to do something on a bottom edge. Okay? So price goes over here, goes all the way up, stops right at that bottom edge. Now we're looking for it to come on down. It does. It comes to this edge that was created way back here. Okay? Goes right to it now. The next step would be is to look at your indicators, your stochastics. What are they saying? Are they saying it's going to go up? Is it oversold at that point? And the answer is yes. Look at this. The stochastic on the 1 hour is turned up, right? It's turning up. Okay, now we're not going to be entering off of this chart. We're going to go over to the 15-minute in just a second, but here's your first sign. Okay, it's at a bottom edge. The trend is starting to go up. You want to buy bottom edges, so you would be buying that bottom edge. Okay, so it does go up, comes right to that edge. Look, comes right back to this edge, this bottom edge that was created here. Okay, it was a top edge here, it was a top edge here, it's a bottom edge here now. Look, right there, goes right to it, comes right off it. You can buy something right in here. Okay, so it goes right up to this level that was created back here, comes right back down, bottom edge. This level was created here. It was obeyed here, it was obeyed there, it was obeyed there, and that is your bottom edge. You buy there. So that's how this works. Okay, now you would like to get the stochastic to be deep in the overbought areas. You don't want to do too much stuff in the middle. Those are not as valid. Not saying you can't, but I'm trying to teach you the most probable, high probability, I should say, entries here. Okay, so anyway, that's how you draw the lines. Now let's go over to the 15-minute chart after we drew our lines, and now you can really see what it's doing. Okay, look how it's reacting to these levels here. Okay, market comes down, it's banging underneath that edge that was created right here. Created that edge, right? Market comes right under it, it's banging under it, banging under it, banging under it. You had 1, 2, 3, 4 chances to sell that trade right there. Okay? So it comes right down. Right here an edge was created. It comes under it. Now this is one that you probably would have got stopped out on because it did make an edge here and did run up and you would have got stopped out. Now this one comes almost to the edge here, just shy of it, right? But it's right near a top edge and did have a nice sell-off. You were getting over. This stochastic here wasn't in an oversold position. This one is a little bit low in the middle, so I'm not sure I really would have taken it. Would have been a nice trade anyway. Like I said, I like to keep them higher up in the overbought or oversold areas. Now it does come down, makes a bottom, okay? Goes right up here. It does make a top edge here. Comes down a little, hits that top edge again. You can sell right there, okay? Comes flying down here, goes up. It makes a top edge. It comes down. So now you're waiting for it to get back up to one of these top edges, whatever. So it goes right up here. You're getting top edge again. So you can be looking to make a sell there, and the price does move down, hangs out down here, and ultimately does fall down. Now, I think that you're going to get the biggest moves, okay, when you can get some confirmation like this, right back here. this, let me make that bigger. Okay, this line is a little too high. It should be right here. But here's the top edge, right? Right here and here. Here's the top edge. Now look at the stochastics here. Okay? Right here, the thing starts to turn down. So it's already down on the 1 hour. Okay? So right there, you can sell that. Or it's moving down nicely here. And now look at the 15-minute. Right here. Right in this area right here. It joins it. And look at the acceleration in a downward fashion right here. So that's really the power of getting the stochastic when it's in its higher stages and coming out of it. Okay? You really don't want to do too many plays where it's in the middle and going down. Because in the middle, I mean, it really could go anywhere. I mean, it could go up, it can go down. There's a higher probability of it moving down if it's way up in the top of this oscillator. And again, we draw the 1 hour, the lines on the 1 hour because those are more valid levels. There's more data, so those are nice top edges and bottom edges. Okay, I'm going to go back now, and this was easy to do because we had this whole wall come down here and the market starting to go back up, so we had like a valley here. Now, if you get into a situation where you have something that's straight down like this, okay, there is nothing over here unless you go way, way back, which is going to be hard to find on this chart. Okay, so what you do in this situation, you have to wait for the market to create top and bottom edges for you. Okay, so we're on the 1 hour. Okay, so let's see what we got. Got a bottom edge that's set up right here, right? Come on. Okay. Okay, so you have a bottom edge set up right in here. Okay? So now you can see the market is trending down, right? Well, you wouldn't see this part yet because it wouldn't be there, but you can see the market is trending down right there. So what are you looking to do? You're looking to sell a top edge. Well, right now we have a bottom edge. So how do you get a top edge? Well, you wait for price to come down through it and come back up and hit it. Just like here, you had a nice reaction off of it. So you could sell anything up in here during this candle, you know, right in here, something like that. Okay? You put your stop up there and you let the market move in the direction that it's flowing. Okay? So with this, we'll keep drawing lines here. So we had that. It hit the top edge. It comes down here, creates a bottom edge. Okay? Creates the bottom edge. Market comes right down, goes under it, bangs underneath that, which was a bottom edge, is now a top edge, goes up, gets a, this long wick is another good indication that there is some selling pressure, which confirms your thought that the market is going down. So you can sell right up there again. Okay? There is a bottom edge right here. Bottom edge comes down, bounces, goes up. So you have a bottom edge there. Look at what the market does. It comes right through it. Look at all this time you had here. Okay? Right up in here is telling you, you know, that that's a potential sell over there. Okay? Now, you want the stochastics to be in line with what you're thinking, right? So, I'm going to take this crosshair real quick. It came from, it was an overbought scenario. It started to move down, but we didn't have the confirmation of that 15. Oh, I'm sorry, we're on the 1 hour. We're not on the 15 yet. So, okay. So it is confirming that it is moving down here. You see this? That is moving down. We're going to go over to the 15-minute in just a second, but you do have your top edge, and your former bottom edge is now your top edge. So look, it came right off of that again. So let's see what happens here. So it comes down. It creates a bottom edge right there. And it creates another top edge right there. Okay? So this candle goes up, stops short, candle comes flying off of there, you can sell somewhere in there if you wanted to, and that would have got you into a trade that the market did continue down. Okay, comes down here, got a bottom edge, and we got a new top edge that formed. Okay, so a new bottom edge here and a new top edge. Market comes in, bounces off of that, goes right through here, comes right up and tests that. You can sell up there again if you wanted to. But I would like to see some confirmation on the stochastic. I mean, these are down already low. I mean, I probably wouldn't be entering anymore over here. You still can, though, because this is the example like I talked about earlier where you can see the stochastic is on the floor. Okay, it's just hanging out down there. It won't get off the floor. So that is still a downtrend. Again, you can take trades if you want to there, but I'm looking for super high probability is all I'm looking for. Okay, so then the market does continue down, creates a bottom edge right in here. Okay, creates a bottom edge. It doesn't come back to all the way over here, but look at the beautiful signal this has given us here. Look at this. Long wick, right? Doji, right on the top edge. Currents down. Look at these stochastics. Way up high, ready to fall. You sell up here, nice sell-off. Okay? So this is how you draw lines if you have no reference points over here. Okay? Look at this, though. I want to show you the power of this. This one top edge right here. Look at this. How's that? Look where that market went to. Went right to that top edge right there. Look at this wick. Now this was set up to be a beautiful reversal trade here. You can see you got a little double top, long wick saying price ain't going up yet. It may later, like it did here, but for the short term, actually this is an hourly chart, so this thing actually went down for, that went down for almost a day there. That's almost, that's probably about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Yeah, these are all hour bars here. It went down for a full day. Okay, so it came flying right up. Look at the signal here. Stochastic way up in the overbought area, right? Look at this. This little top edge, right? Bam. Look at that sell-off. That thing went from 0,900 down to 0,600. That went 0,615. That went 285 pips in one day. Okay? So that is how you draw the lines on the chart. And you can see if you just keep dragging the lines across from the left, they will help you on the right. If you could find one of these faces like this, that it creates this face and you can draw lines off of it. Okay, if you could draw lines off of this face, look how it would have helped you over here. All these lines you drew were in play over here. Just like this. We drew all these lines on the way down. The price is reacting to them over here. Okay? So on this one here now, that we just did, I wanted to just pop over to the 5-minute chart. See if I can find my lines. Okay, these are them. Okay, so we can see, I'm sorry, 15-minute chart, not 5-minute. These are the lines we drew on that trend that was down that had no reference point to the left. Okay? But as you can see, you have, when you come down to the 15-minute chart, you can have more opportunities to get into these trades sometimes. Like in this case here, you got the 1 opportunity, the 2 opportunity, the 3 opportunity to get in. You're looking for the most high probability with the indicators higher. So again, you did have the currents aligning here. would like to see the stochastic a little bit higher, but nonetheless, you still did get a good signal to sell here. I would say the most high probability trade on the chart is this top edge here. And you can see because the stochastic is way up here, this thing is starting to confirm, and it does, and we have a nice big sell-off. Let's see, this thing went 0.679, over 100 pip move right there, okay? And that was only in a few hours, okay? So where else was another high probability setup? Right in here, let's see. And so you got that top edge there, right? So would have liked to see this a little bit higher up, you know, close to the top edge, so I probably wouldn't have jumped on that trade there. Let's see. And this is when we were seeing our potential reversal here, and price did shoot all the way up to that level that we indicated back from the left there. But look at the beautiful signal here. The stochastic 1 hour rolling down, the 15-minute rolling down, and look at this sell-off. So it comes right up into a top edge, and we could sell that right down. So basically, that is the lesson here. So if you have any questions, you can go over to the optiontradersgroup.com and check us out over there. And we have a forum where you can ask questions. You can also go on our Facebook page. The address is www.facebook.com/the Option Traders Group. This is our page right here if you want to check us out. And also, this is our this is the website. Just come on over here. You click on the forum, live trading, and the forum is here. This is where you can come on in, post, and we'll be populating this with some information for you on educational videos and links and all that sorts of stuff to help you learn. But we do have a live trading room as well. And if you click on the live trading room, you can go over there. We do our analysis for some of our trades at certain times of the day. And we do get question and answers going on in there. And I do post on Facebook when we are in there live and looking for trades. We do in the evenings if you're a nighttime trader on Forex and Nadex and stuff like that. We do trades usually around 11 o'clock. We start our analysis, and we're doing some overnight out of the money type of trades. And then another big time that we're in there is for 8 to 3 p.m. So 8 in the morning to 3 p.m. and that's the our overlap trade that we do. And that is we're looking for reversals, or even we do jump on trends during the New York session and the overlap of that and the London session. And then the big one is our in the money strategy. It's from 1 p.m. to 11 p.m. where we're doing deeper in the money options on Nadex and collecting premium on those trades. So head on over there, check us out, like our Facebook page, and I hope this was beneficial. And again, if you have any questions, please let us know. I'll be more than happy to answer them for you.